Good morning and welcome to Stock Market Today. It is Monday, November 26, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. If you're over on Stock Twits, I'm there as well under the same handle. Stock Market Today brought to you today and every day by Chaikin Analytics, in conjunction with StockCharts.com and Stock Charts TV. And you can sign up to receive a free email. Follow along with this show. Head over to ChaikinAnalytics.com/today. Getting back in the groove. Hopefully you had a nice extended holiday weekend. U.S. equities were lower in a shortened Friday trading session. Treasuries were mostly stronger with a bit of curve flattening. The dollar was stronger on the euro and sterling, but down against the yen. Gold was down 40 basis points at the market's close. Oil came under pressure again, WTI marking a seventh consecutive weekly decline. Defensive sectors continue to outperform, with staples and utilities leading. Weakness in crude led to underperformance by the energy sector, which fell by more than 3% on the day. Comm services and materials were also laggards. However, as we get to the desk this morning, things are looking up. S&P futures are up 1.2% after coming under pressure again last week. Asian markets were mostly higher overnight, though China lagged. European markets are seeing gains, with Italy leading. Treasuries are weaker with a bit of flattening in the curve. Dollar is firmer on the yen, but weaker on euro and sterling. Gold up 30 basis points. WTI crude up about 1%. And as we look at the index, though, despite the rally here this morning in the futures, the burden of proof remains on the bulls. Support comes into play 2570 to 2600. That's the area of these lows from earlier this year in February and then late March and April. Resistance now, I didn't put it on here. I don't want to crowd up the chart too much. Resistance comes into play near 2700. The RSI does remain in bearish ranges. That's plain to see. But what's also interesting to me is the positive divergence at the recent lows, especially on a closing basis, is a potential bullish sign in the near term. Also, a potential bullish sign in the near term is the fact that as we've sold off here from that interim high following the elections, Chaikin money flow has not gone bearish. So some counter trend rally potential from the indicators, but the burden of proof remains on the bulls. Our market in a minute now. Here's what I'm talking about in my note, or writing about, I should say, in my note to Chaikin Analytics clients today. Stocks fall to test the October lows. Oil trades to $50 and is now deeply oversold. We'll take a look at that. The intensity of small cap underperformance is dampening, and we'll take a look at what that means. The U.S. dollar continues to move higher, and I think that those two are related. I think that as the dollar moves higher, we're going to see some support to the relative, not absolute, but relative performance of small cap. And as I said, futures do point to a higher open. But before we move on, let's take a look at the power bars. For the major indices, the Dow declined, saw some degradation in the ratio here on Friday. This was 5-5 on Friday. Now it's 3 bulls to 5 bears. Degradation as well, deterioration, whatever you want to call it, in the S&P 500. 50 bullish or very bullish stocks, 95 bearish or very bearish stocks. NASDAQ, 12 bulls to 21 bears as that group underperformed on Friday. And here's what I'm beginning to speak about. S&P 500 down nearly 80 basis points. Small caps, call them flat on the day. That's outperformance. 167 bulls to 475 bears is still not encouraging. There's your uptick in bonds, which sent yields lower. 10-year yield now about 3.05%. And according to the Chaikin Power Bar, small cap stocks and large cap stocks are bearish. Major markets are mixed. If you're following along in that email, Lantheus Holdings from the Medical Products Group is our stock idea for today. Every day we'll give you an idea to consider. It's auto-generated, based on our proprietary Chaikin Power Gauge rating, and Lantheus has a very bullish rating due to very strong earnings performance, attractive financial metrics, strong price volume activity, and positive expert activity. I have to tell you, this name has been hitting some of my screens, and what I'm waiting for is an oversold condition. But what we're going to do is walk through the process here, because this is interesting to me. Neutral stock through most of the past 12 months is now bullish. Underperforming really from February until the beginning of November. Now it's outperforming. Money flow turns bullish. Regains the long-term trend line, which is beginning to turn higher. This is what we refer to as a personality change. When a stock goes from a deep underperformer to now a strong outperformer, it has undergone a personality change to put the market and model in agreement. The dynamic duo are in gear. I think that if you want to, you can start to add this stock to your portfolio. And the way I like to play it is this. I think if you add it here at $16, you can add more as the stock becomes oversold, or really, on a breakout of these September highs, add to your position. But I think you want to have this name in the portfolio. It's been popping up on my screens for a while. I don't want to miss this one, but I don't want to get a full position right here because I think that, you're not oversold yet. I like buying names when they're oversold, especially in this market environment. But I also like buying breakouts. So there's two ways to play this one. Starter position, add to it on a breakout, or add to it when it becomes oversold. Obviously, as well, if the options market set up, you can get bullish exposure that way. But I like Lantheus here, Lantheus on the long side. Sector tracker over the last 5 days, there's really been nowhere to hide. You can see it in the performance. All the major sectors are red over the past 5 days, but the defensive groups are outperforming, while tech, energy, and comms, your risk-on type names, have been underperforming. Obviously, energy is a function of oil. Technology, comms, discretionary, those are your beta plays, and they are coming under pressure. They remain under pressure. We've been focused on the defensive groups for a while, and that has been the right call, and that has been the right way to be positioned, and it remains so because the burden of proof remains on the bulls. Our industry in focus today is actually one that we wrote about last week. For those of you who received my bearish insights note, we started talking about healthcare equipment and services, which went from a market leader that we were very bullish on to a now laggard, which is, and we're bearish on it. And over the past 6 months, healthcare equipment subsector has underperformed the S&P 500 by 84 basis points. It's a very weak power bar ratio, points to weak future potential. It's currently ranked number 10 of 21 subsectors, and actually has, despite this ratio, it's actually moved up 6 slots over the past week. So that tells you what's going on in the rest of the market. 6 bullish or very bullish stocks, 23 bearish or very bearish stocks. And some of the indicative names here: ViewRay, V-R-A-Y, very bearish. Tactile Systems, TCMD, very bearish. And Irrhythm, IRTC, very bearish Chaikin power gauge ratings. So we're going to look at one here because I think it's early days, and I think you're going to get a really good opportunity to open a position on the bearish side in Tactile Systems. Very bearish stocks, weak trend, weak industry group. Look at this uptrend that's now rolling over. Look at the intensity of outperformance that is now an underperformer. Neutral stock all along, and now it's on a very bearish rating. Market and model are in agreement. Dynamic duo are in gear to the other side. What we want to look for now is an overbought condition with bearish money flow. Nice rally back to $60. That generates an overbought condition is an opening on the bearish side of the coin for TCMD. This group is rolling over. They are transitioning from leadership to a market laggard. I think you want to look for opportunities in bearish and very bearish names when they become overbought with bearish money flow to open to the short side, or to get the names out of your portfolio if you've owned them. You've had a nice run here. If you've owned TCMD from $35, $40, rode it up to 70 and now it's rolled over. This is trend following. The uptrend is over. Potentially new downtrend starting. Get this name out of your portfolio if you own it. Look for opportunities to open to the bearish side if you trade that way. Yesterday's S&P 500 movers, or I should say Friday's S&P 500 movers. On the gainers side of the coin, Rockwell Collins adds nearly 10% following their earnings announcement. AAL, American Airlines, pops nearly over 4.5%, nearly 5%, likely due to the decline in oil and the positive impact that should have on their operations. AMD, semiconductors are actually starting to look interesting to me. I'm starting to really watch that one for stabilization on a relative basis, and if some of these bigger names in the group can start to move higher, that could be encouraging. It's early days. It's not there yet, but the potential is there. I'm watching it closely, and obviously will let you know if there's a change of view in any way, shape, or form, but I think there's just seeing a relative relief rally there. IPG Photonics, no news to send that stock up 2.75%. UTX received FTC OK for a transaction involved with Pershing Square. That sent that stock up 2.65%. On the loser side, Concho CXO down 6.3%. Devon down over 5.5%. Marathon up down nearly 5.5%, and EOG down 5%. You can guess what all of those have in common. They are levered to oil, which fell out of bed again on Friday. A little bit of a rally here this morning, but that trend is broken. I think you use rallies in the price of oil and in the price of energy stocks, especially the E&P companies and the services companies, to lighten your positions or get out of positions or open bearish positions in those names. I think that rallies in the price of crude should be treated as suspect, as there is a lot of resistance overhead once we get to the $60 to $64 mark. That was the level that gave way, that started this cascade lower. And I don't think we're just necessarily going to snap back. I'm just not seeing signs of it. Oil is deeply oversold, as we'll look at in a moment. So a counter trend rally can't be ruled out, but the rally is in oil should be treated as suspect. So here's your small caps holding relative support. You've seen this chart a number of times, but I just think it's interesting that as the dollar strengthens, small caps are holding relative support here. They rolled over early, and now they're bottoming, or they could be bottoming. If this level continues to hold, that could have bullish implications for risk-on assets. Obviously, we're not looking at this in a vacuum. We will look at all of the other data points that we constantly look at to determine our market view. But small caps are beginning to hold relative support. As I said, crude oil has become deeply oversold. Here's that breakdown. Here's that $64 level. And when that gave way, it was just a complete cascade. Small counter trend rally, really no match for the strength of the downtrend. And then the move down to 50 on Friday. Below the 50-day moving average, below the 200-day moving average, in the process of putting a death cross in place. But look at the RSI here. Deeply oversold. Most oversold readings we've seen in the past 12 months. I think that could potentially set the stage for a counter trend rally in the price of crude oil. But look at all of the resistance overhead. Use a counter trend rally in crude to get bearish and very bearish energy stocks out of your portfolio. I think if you're trading opportunistically and have bought some oversold energy names, if they rally here with crude today and over the next few days from oversold conditions, treat them as a trade. Any rallies in crude should be treated as suspect until further notice. I would also point out the intensity of this bearish money flow for WTI crude. And something that's probably not helping the commodities in general, and especially crude, just kind of weighing on it, is this continued uptrend in the price of the dollar. This is the Invesco US dollar bullish ETF. As the dollar moves higher, that has a negative impact on the price of commodities, because globally commodities are priced in dollars. So this is not going to help the cause of the commodities. However, as I said, as we were talking about small caps, I think that as the dollar continues to move higher, it helps the relative performance of small cap stocks. I said relative performance, not absolute. We looked at the chart back here. So we're starting to see some stabilization in small caps relative to the S&P 500, coinciding with a continuation higher of the US dollar above the 50-day, above the 200-day, bullish money flow, RSI in bullish ranges. I think the dollar continues to work its way higher. And I think a name here that's worth taking a look at on the long side that I'm pointing out in my note to Chaikin Analytics members today is Novartis. Bullish stock, strong trend. It is a weak industry group, but there are a lot of smaller names in the drug industry group that are weighing on in here. Bullish rating coincides with outperformance, which has been in place since September. Market and model are in agreement, dynamic duo in gear for this oversold stock, which has bullish money flow and is above the rising long-term trend line. I think you need to take a look at Novartis, NVS, as a bullish idea here today. Also in the leading industry group, or sector rather, leading sector of healthcare. So that's it. Sign up chaikinanalytics.com to get your free email to follow along with this show. You'll also get daily stock ideas for free, and help us spread the word. Share our link on social media if you like what you're hearing here. We'll see you back here tomorrow.